Hey everybody, what's up? It is Tuesday, August 7th. Yesterday, of course, I did not put out a video because I was finishing up this week's edition of MMT Trader. If you want to get a copy of that, please go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. By the way, today I emailed out two new stock recommendations. One of those recommendations fits in with the Make America Great theme by Donald Trump. So you might want to see what that is. And again, if you are not a subscriber and if you want to get that email with that stock recommendation, very good company, by the way. Stock price really attractive. Just go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader. And let me remind you that on September 1st, the monthly subscription rate for MMT Trader will go up to $195 a month. It is currently $145 a month. Current subscribers, you are not going to be affected. I have subscribers who bought in at $75. That was very smart. Subscribers who bought in at $100 a month, $125, $145. That's still a good deal. It's going up to $195 on September 1st. All right, so much for that news. Now, let's talk about a few things. First of all, U.S. dollar. Let's talk about the dollar, which is holding in current ranges, right, just slightly above the 95 level in the dollar index, okay? I continue to sell every dollar rally. This morning we had a rally in dollar Canada. I sold into that rally. Now, let's go over some of the facts, some of the numbers. I know there's a lot of talk about king dollar and there's no other alternative and the dollar's going up because of tariffs and sanctions and all this other stuff, and there's only the dollar and it's just going to go up and interest rates are going up and the dollar's going up. Okay, all that stuff I have discussed in the past. The whole interest rate argument is bogus, as you know, because we had 7 rate hikes, the dollar is lower. We had 7 rate hikes, even gold is higher, despite this big correction that it has, or that it is currently in. Now, number one, the United States federal government is on track to spend a record amount this year, approaching $5 trillion. It's going to be 4.8 something or 4.9 trillion. It will exceed the 2009 stimulus high. So you have a massive amount of government spending going on. The budget deficit, the federal budget deficit right now is at $665 billion. That is the highest it has been, I would say probably at least, it could go back maybe almost 7 years, all right? That is up, and by the way, that's up $117 billion over where it was last year. I know for many of you who are dollar bulls, if I just pulled you aside in a totally separate conversation and I said, what would you think of the currency of a nation which is doing massive, massive deficit spending, whose deficits are enormous, 3.3%. By the way, that deficit of $665 billion right now, and that's going to get bigger by the time the fiscal year ends, on September 30th, that is 3.3% of GDP. Folks, that's bigger than the deficits of the countries in the EU, all right? So if I pulled you aside and I said, what would you think of the currency of a country that is undergoing massive deficit spending, deficits larger than the EU, running a historic trade deficits? Let's talk about that. The U.S. is running trade deficits. Despite all this stuff about tariffs and protectionism, trade deficit is running at $46 billion a month, all right? That's almost $600 billion a year. That's the trade deficit on goods and services. That's not the total current account deficit, which is higher, okay? So you have massive trade deficits, $46 billion a month. You have a $665 billion budget deficit, which is 3.3% of GDP. That's larger than the deficits of the countries in the EU. You have a $5 trillion net spending, approaching $5 trillion net spending this year. All right. You have, by the way, these tariffs are inflationary, right? They raise the price on American consumers. Now let's look at the argument where, okay, the tariffs are negatively affecting countries like China and other countries in the EU. That's a valid argument. And we see that. We don't really see it in the numbers. I mean, China's second quarter GDP growth was 6.8%. As a matter of fact, it beat the estimates. But let's just accept that it's going to slow the economy. We look at their stock market, it's gone down, etc. Well, then the only way for U.S. producers to export to China, to send their goods to China, aside from being established over there, but if you want to export, you have to lower the price to maintain your market share. That is functionally a reduction in the exchange rate of the currency. All right. So, as the tariffs negatively impact other countries' economies, it puts U.S. producers in a situation where they need to lower prices to retain market share, and that is functionally an adjustment downward in the exchange rate. So you have all this stuff going on, folks. I am selling rallies in the U.S. dollar, all right? And we will see how this concludes. Yes, you had a rally off of a very oversold condition that developed in March. The dollar index went from 88 to 95, and now basically we've been sitting at 95 for, what, 3 months? It's not going higher. And I'm using this opportunity to short dollars. On to the next discussion. The United States has reimposed sanctions on Iran. Those were sanctions that had been lifted under the former agreement, which Trump canceled. Crude oil prices are up. The sanctions attempt to restrict or curtail or prohibit basically any kind of commerce with Iran. And Trump tweeted this morning a very, very, very hard, stern warning. He said anybody doing business with Iran in any way is not going to do business with the United States. So to the degree that that affects Iran's oil exports, and by the way, Europe is saying it's not going to go along with this. And here, this is an interesting thing developing. We all have to pay attention to this. It's not one of these factors that's going to necessarily push the currency, the dollar, one way or another, but you have now resistance on the part of the EU saying, hey, we're not going to listen to what you say. China, we're not going to listen to what you say. We're going to keep on doing business. So a real confrontation is shaping up. How much power does the United States have to dominate in the dollar structure, the global dollar transactional structure of the world? All right, it has a lot of, does have a lot of influence there, obviously, but how much or to what degree, to what extent does that forcing other countries, how will that affect the U.S. dollar? It's a very interesting question. It will play out over a period of time. My contention is that we are on the cusp of a major paradigm shift from a unipolar world, which basically has been in existence for almost 80 years, 70 some odd years, where the dollar has been the linchpin, the focal point, a dollar transactional and clearing global economy, to a multipolar situation. All right. And there can be, if Trump's intention is some sort of a quote-unquote rebalancing of global trade, that cannot happen with a strong dollar. It just can't. The dollar has to go under a significant devaluation for that to happen. And that in my opinion, is going to happen, and that's why I keep shorting every single rally. Yesterday, or the day before, I think it might have been yesterday, Jamie Dimon said he expects 10-year Treasury yields to go to 5%. They're currently just under 3%. So 5%, and obviously he's either reading my stuff or he gets it. It's not only Fed rate setting, but the fact that every time they raise rates, they raise the inflation rate, because rate setting is price setting higher. We see that. Okay, you could look at any chart of inflation. Go back to December 2015 at the point when the Fed shifted policy and started to raise rates, and all those things started to go up. Even gold started to go up. It was $1,043 an ounce on December 15th, 2015. It's at 1,200 now, 1,220. And it got as high as what, 1370, 1390. So there you have it. So that's it, folks. Remember, I'm shorting every rally in the dollar. You have 665 billion budget deficit, 3.3% of GDP, larger than the EU budget deficits. You have approaching 5 trillion this year, which will be a record in government spending. You have 46 billion a month in trade deficits. You have the central bank raising rates, which is inflationary. You have the tariffs, which are inflationary. You cannot have a rebalancing of a global trade situation without an adjustment in the currency downward. U.S. producers will have to cut their export prices in order to retain market share, all this stuff. So if you don't understand this, and if you just say, oh, there's only the dollar, well, you're not really running on any real understanding. All right. So that's where we are. We'll see how this plays out. Remember, subscription costs for MMT Trader. I'm the only one who has an applied MMT approach. There's a lot of academics out there. There's a lot of people who talk about MM theory and concepts. My background is as a trader. I was a member of 4 exchanges. I traded for a major hedge fund. I traded for a major international bank. And I'm an economist who follows MMT. So I put it all together. It is the only applied MMT approach out there anywhere. All right, folks. See everybody later. Bye-bye.